market saying is as goes January, so goes the market, suggests that the stock market's performance to start the year often sets the tone for the next 11 months. In this morning's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Dennemman looks at the results from last month and what that means for 2015. He's with Business Courier publisher Jamie Smith in the studio. Gentlemen.
Thanks, Peg. Mike, thanks for being here today.
Good morning.
So tell me, why is January such an important indicator for us?
Sure. Well, like Peg said, there are a lot of market observers who believe that January is a strong indicator for the rest of the year. If we start off strong, the rest of the year will be strong, and vice versa. So, believe it or not, the analysts have looked at this pattern, and depending on how you interpret the data, it seems to work about 70% of the time. Okay. So that seems to suggest a pretty strong correlation, of course. But then there are others who say, it's no more than just a random coincidence. Okay. I mean, January tends to be a strong month. The market tends to go up more than it goes down, so maybe it's somewhat of a self-fulfilling prophecy, but still, all things being even, you'd rather start the year on a high note.
Okay. All right, well, given that trend, or your thoughts on that, where are we after January?
Well, unfortunately, it wasn't a very good start to the year. So the market finished 2014 on a high note, but then it lost about 3% last month. So that suggests that there was no January rally, of course, and it's actually the second January in a row that we've started in negative territory. If you remember last year, January was one of the worst months weather-wise that we'd had in decades, and that was really a hard hit to both the economy and to the market. But, contrary to our little theory this morning about as goes January, so goes the market, stocks bounced back very strongly last year. Once the snow melted, it actually put up a pretty good year. So certainly that didn't fit the pattern. So it'll be important to see if this year stocks have that same sort of, I guess for lack of a better word, the resiliency that we saw in 2014.
Any other indicators out there? What does this mean for the rest of the year?
Yeah, so we've had a nice bounce back to start February. Okay. So that's certainly welcome. It'll be important to see if we carry that momentum through. But again, it's important to remember the market dynamics out there. Last year, again, pinning most of the blame on the weather, but that was only temporary. We knew that warmer temperatures were right around the corner. This year, I think some of the concerns are a bit more fundamental. People are worried about what's going on with the Federal Reserve and interest rates, what's going on in Greece with currency fluctuations, the price of oil. There's so many concerns out there right now, and these are real concerns. So until we get some real answers, I think it'll be hard for the market to make a sustained run. I might also mention, since we're talking about market superstitions, that there's another one out there that seems to have some negative connotations right now, and that's the Super Bowl indicator. And the proponents of that say that when the NFC wins, that indicates a strong year. When the AFC wins, maybe not so much. So for those of us who would prefer to be bullish, that late interception last week was not a good sign.
Oh, wow. I think I'd rather go with the January theory than the Super Bowl theory. Mike, what do you think?
Maybe we should just flip a coin.
There we go. Well, I appreciate the data and the knowledge. Obviously, it brings a lot of thought, a lot for us to think about. Great. So we'll see you again here soon.
Thanks.
All right, Peg.